Hi, I'm John Wildy with Locum CRNA.com and the 1099contractor.com. Today I'm going to talk with Julie Nycom from the AANA insurance team, and we're going to talk about malpractice insurance. Unfortunately, I did a stupid and I forgot to hit the record button at first, so there's a few things that I'm going to go over, and she's not going to get any introduction on here. It's just going to go straight into us talking. So that might be a little interesting, but we are going to power through this and get going here. So there's two types of insurance: a claims made with a tail or an occurrence-based policy. Your claims made with a tail means that you have one set policy limit, and that policy limit expands to create the years that you are covered and your tail coverage for a total policy limit. Whereas your occurrence-based policy is every year you have a 1, 3, or whatever your coverage limits are, and that renews each year and is therefore your coverage for that entire year, whether your claim is made initially during that policy period or if the claim is made after, for anything that is actually within your coverage time frame. And you would be covered with those limits each year. And then we talked a little bit about the different state funds that are used. There are 6 state funds for CRNAs and a 7th for anesthesiologists. And those state-based funds are larger funds with capped amounts that are held by the state for malpractice. They help to decrease the amount of awards, and they are a little bit more limiting in the nature and the type of insurance based on what each state will allow as part of their fund. Kansas, I know, has a claims made with a tail policy, and that can cause a little bit more of a concern, but we don't, well, number one, we don't have a choice about the type of policy if that's where you live and that's where your policy is. And then those limits usually will be covered up to those limits in other states if you were to work outside of the state, or you would be able to get your policy to extend and prorate depending on the state and location. I didn't ask about the other high risk areas. It's not that insurance is not offered in those higher risk areas. For areas like San Bernardino County, in Philadelphia, and New York City. Those are some of the higher risk areas for potential of a lawsuit, and that may increase your overall premiums. There's very few places that insurance is not offered through the AANA, one of which is the U.S. Virgin Islands, and that's probably because there are not very many CRNAs that are out there, so they have other, at least there's one other malpractice carrier that you can use out there, but I do not know if they're admitted or non-admitted. But those are things that you need to look at if you're going to either a high risk area or if you're going somewhere outside of the continental US.
Right. Yeah. If you have a group policy, a group formed, and you're all working on behalf of that group, and you're all CRNA owners, we can cover that. We would issue price within our letter of authority. But if you have physicians also owning it, so CRNA and physician to own group, then we would still manage a lot of it, but the policy would be issued for the physicians from MedPro and, sent out from MedPro, maybe through us as first and then over to you. But yeah, so that's a little clunkier when you have that, but long-term, we hope to be able to issue one policy for both those types of specialties.
But as a CRNA, sometimes we'll go to a small group and they'll want their group like as an additional named on the policy. Is that something that's normal, or is that something that puts you at higher risk and would then increase your premium?
Yeah, so if we do have a vicarious liability charge. So if naming that additional insured falls under our vicarious liability charge because, in the rare instance that they have access to, basically what would happen is they could be directing you in such a way that they've contributed to the loss of in some way. And so it's good for us to collect some premium for that because, that's an added exposure. We underwrite you. We only get your application. We don't get their application necessarily. Right. So that's, we have to price to make sure that we're adequately pricing for you and that additional insured. So yeah, we would probably end up getting a vicarious liability charge for that, which is fairly nominal. Yeah.
Okay. And then would that be the same? Have you ever had locums groups that try to attach their like agency or whatever as part of the named, or no? Do you know?
It's rare, but our additional insured endorsement has wording called solely responsible. So it's basically still saying that if our named insured, you, let's say in this case, is 100% solely responsible, then, and you're named erroneously as an organization, we will get you dismissed. We're not going to defend you. We're not going to indemnify on your behalf. We will get you dismissed. So it's basically saying you have your coverage, we have our coverage. If one of us gets named erroneously, we would like you to dismiss us, and then we will dismiss you. So the staffing organization. So it's not really binding us to defend and indemnify them in any way.
Okay. Yeah. So say you had some kind of a claim, whether it be a little claim or a big claim, number one, what's kind of the process that one would do? Do they start by, would you actually get the information first, or who gets the information first that there is a potential suit?
Normally, you'll be notified that you've been named in a suit, and you should immediately contact us. We'll take a report, and then a MedPro claims rep will contact you back. So we get the initial, claim report basically, and then pass it on to MedPro so that they know who to assign to it. And then they contact you, and then you run with that with the claims rep. They'll, depending on, how it progresses, they'll assign a local attorney for you to meet with and to work with through the process. So, and CRNAs have a history of reporting claims within like 5 days of, something that they're concerned with. Our policy is unique in that you can actually self-trigger it too. If you have a concern, you can, either ask for risk management services from MedPro, or you can report it to MedPro and see, like, is this a claim? Is this something I should be worrying about yet? So at least you have the chance to at least check in, and they're not going to be upset with you checking to see, what do I do? They just want you to report timely. So that's, I think that's always beneficial, because then you've got an expert that you're conferring with through that process.
Now, if you were to do that, would that, say you were concerned about an event and, say someone died in the OR and it's first time that anyone's died in the OR for you, and, it may not have anything to do with anything you did. They may have been 100 years old and a fractured hip or something, and it was just, their time. But if you were to call and ask about that and risk management / talking to your insurance policy, would that then give them rise to increase your policy premium in the future?
Well, the risk management part of it wouldn't, and by just asking questions about it, they can also help guide you, like, oh, this one sounds like you've received some form of notice, you've received a threat, it's not in writing yet, but why not, call and get a claims rep involved. But I think, if in doubt, what they'll do first is say, doesn't sound like you have enough notice yet. And they'll decide, do you go to a claims rep, or do you go to the risk manager and have them help at least either reassure you that until you hear anything differently, it sounds like you're telling me you did everything right. I'm not sure what your concern is, but we're here to, talk to you and be a resource for you. And so I think that's the benefit of MedPro, is that they work with you through that. But we would encourage you to report it, sooner rather than later. Now, and if it isn't really a claim, how can it be counted against you? If it's
Okay.
an incident, they'll continue to monitor it and see if the incident ever turns into anything. And of course, assign resources to you if it does. If not, then the incident closes for nothing. No legal fees, nothing, no anything else, because it's just it's part of MedPro that you're reporting it to, and they decide if they need to assign a lawyer to it.
So the
All
claims,
this.
so basically you would receive notice, you would call the insurance agency, in this case, it would be you guys, and then it would go on to a claims representative, and that claims representative is the one that would determine if a lawyer was to get involved. And if that's the case, do they find the lawyer, or is that something that's on the CRNA to find?
No, they do find a lawyer. MedPro writes over $2 billion in medical malpractice coverage a year. So, and they monitor and have metrics around their lawyers. So, I mean, lawyers would love to represent MedPro, because of that high volume of premium, you're going to get a flow of cases. When you have $2 billion, you're going to have a claim. So, they're kind of somebody that law firms like to be able to try to sign up with. But they have really well-established firms. They've been around since 1899. And, at the point that it turns into the claims rep helping you, you do have first a MedPro representative that's highly trained in claims. And then as it progresses, of course, then they bring in those their claim reps for a local area, wherever that claim was occurring. They bring that local attorney into that, which understands the venue and that particular area better than anybody would.
Okay. And then with that, with the insurance in force, can like the AANA insurance, or can MedPro like force a mediation or a settlement, or if that's not on the CRNA, that's the covered, and I'm assuming that it's their policy, because if it's a group policy, my understanding is that a group policy, the group primary holder can determine that, as opposed to the named.
Right. Okay. So MedPro's policy doesn't have an arbitration clause between their named insured and the company. I know that some carriers do have arbitration requirements. MedPro offers a pure consent to settle, so they will continue to defend you until you provide consent. And that consent will be discussed, and you'll make an informed decision. If for some reason there was some form of negligence, they might guide you to, like, hey, these are your options. You have pure consent to settle, but we also care about you having an informed consent process, because your personal assets, if you breach this limit, it could get to your personal assets. And, here's an expert saying that there's some negligence, and whether that's a valid expert, or or if you find other experts that say, oh yeah, definitely you maintain the standard of care. Those are all discussions. And this is what's so tough about when you talk about claims. Every little detail matters. The way you filled out your app, the way the circumstances, the patients, what did they comply? Did they do something you didn't know about? All these different factors come into how the policy responds.
Okay.
So it's really hard to get to specifics, but I think you're in good hands when you have a pure consent to settle, because you have a voice in the handling of your claim.
So along with that, you said there is some chance of personal liability. How does that, I guess, roll over if that were to happen, or what happens there?
Well, we offer limits. No, we don't recommend them, but from 100,000, 300,000 to, some states like Virginia has, in the 2 million,
2,
6 million,
4.
and
Yeah.
it keeps stepping up 50,000 every year for several years and still to come. But so you have all of those different menus of limits. And if for some reason you didn't follow our direction and say, look, the usual and customary in that state is 1 million, 3 million, and you chose 100,000, 300,000, you can imagine that you could easily breach that limit, right? And that's when your personal assets are at risk because you didn't, you selected a limit that wasn't usual and customary, and it breached it. That would be one example. The policy also extends for some premises liability. If, in a situation where you were on someone else's premises as a 1099 and you caused a slip and fall, you spilled your drink and then you got busy and forgot to clean it up, or I don't know, whatever it might be, they could come back and you do have, that's another liability that they could try to direct towards you. And there is a shared limit for some premises liability because you're going on other people's premises all the time. There's trying to think what other, there's some benefits back to you too, like I'm gonna stop for a second. I'm so sorry. There's assault upon provider. There's almost, there's like a med pay limit for guests of your patient. If some little kid was there and reached up and touched a sharp that, was used previously, that would be, there's some med pay for that. There's all kinds of different coverages under our policy. But as far as the personal liability, I think it's mostly whether or not it, goes beyond the policy limit. And that's unusual because most of the time people are purchasing the usual and customary for their state. And for the patient compensation funds, is even more difficult because that excess limit that they provide takes it up to the cap.
Okay.
So, that would be another example where you're protected even more because they have a real cap in their state.
Okay. But that's not on negligence. That's just on malpractice, right?
Right. I mean, the reason it is due to
I mean,
negligence.
malpractice to me is kind of negligence. So
Yeah.
is there a difference in how we're determining that negligence versus malpractice?
No, I think there's an alleged negligence, and when you go through the process, you determine if there really was some proven
Profound
negligence.
failure to, follow a standard.
Yeah, you could, failure to meet the standard of care. It could just be the facility didn't have the equipment you needed, or it was out of date. Sometimes people go into the smaller dental offices and they've contributed to it, but still you have some responsibility too. And so as administering the anesthesia and knowing what you having what you need, things like that. So there's always, the claims are always going to allege some form of negligence, and then we may find out through the course of that the patient contributed to their own negligence, ate when they shouldn't have, or they I don't know what other things better than I do, some of the things that they contribute to.
With a claims made policy, then, if you were to have a claim of some sort, is it possible that they could refuse you a tail?
Not in the admitted market. The non-admitted market, it just depends on their policy language. I've seen some that refer to some type of a contract outside of the policy. That's very rare, but that would be non-admitted, or a trust, or something else other than the admitted market. So the admitted market has to file all of their policy forms, their rates, their rules in every state they do business in, and it has to be evidence-based. So if they want to justify their rate or a rate increase, they have to have an actuary come in and put all the evidence together to prove it. And then the state has actuaries too, and they say, okay, they've made their case here. We're going to grant this rate increase, or no, we don't believe that it's warranted. So it would get rejected. And sometimes, that we might disagree with that, as far as the actuary and at the company level, but in the end, that's how the state, protects their residents, by going through all of those admitted filings. A carrier that's admitted needs to be equitable. So if you get new to practice within 6 months of graduating, anybody that graduated within the last 6 months and applying for coverage will get new to practice, right? So you just have that equity. You have coverage terms that are more beneficial to the insured than the company. So that's why you'd be more likely to get a, consent to settle clause on a policy that's in the admitted market. The non-admitted market may have a deemed expedient clause. They'll just settle a case as they deem expedient, fastest, quickest way. Stop those defense dollars, right? That's, yeah.
So is a claim kind of career ending? I mean, I know it depends on how gross, or if it's a true negligence versus something just happened and we paid out, like a broken tooth. A broken tooth would typically not be something that's career ending, and something that you're probably not even going to talk to your policy about. But say there was something intermediate that is, it didn't cause a death, didn't cause anything significant, but it's still, you had a claim, it paid out, person had like a longer hospital stay because of you, and they charged you with missed work and everything else, and all of a sudden you have this claim for, say, 25,000. Is that something that would then cause significant issues in being able to get work or be able to continue malpractice coverage? What happens once you have a claim for being able to get coverage?
So 25,000 is not a huge claim unless there was some, moral hazard during that claim, or there was some egregious outside the standard of care alleged, and you just had a great defense, and it limited the dollars to 25,000. That wouldn't alter your career. They may debit it if they, if they wanted. If you'd been with them for a while, they might not right away. They might say, well, let's, that's the first time ever in 15 years that this person's had a claim, and 25,000 probably isn't going to be that difficult to navigate. As long as, and more than likely you've done a pretty good job for it to settle for 25,000. But let's say it's $750,000, and there's allegations that you didn't maintain the standard of care. They could debit you, they could non-renew you, and we'd have to move, as your broker, we would try to move you over to the non-admitted market. So your coverage would be less. You wouldn't have a consent to settle. You'd have that deemed expedient. There's just, and they can change rates or forms. They don't have to file evidence base with every state. There's no protection for the state guarantee fund like the admitted markets have. So, insolvency is a little bit easier on that side than it would be under the admitted market, because they have to be scrutinized every year in the admitted market for their financial strength. So I think I think if you had a large claim like that, like I said, it would either be a debit. They could debit you 50% premium, or
I guess I don't understand the debit you part. What does that mean?
That means your premium, if your premium was $10,000 and they debit you to 50%, it's not going to be $15,000.
Okay.
Yeah. So that's a way of them recouping some of those expenses. But Yeah, they're really just looking, there's a lot of different factors that are involved in the underwriting process, and they do look at the actual facts of the claims. There are, they do have to consider how they're funding our portfolio. So the fact that 750,000 was paid out, that spread of risk is there, but ultimately you were somewhat involved in, not you, but that whoever incurred the $750,000 claim, there's an expense that they need to share in and to continue to contribute to the profitability of this portfolio, which means they'll probably get debited, or they'll have to leave and go over to the non-admitted market. And after 3 to 5 years, if they haven't had claim activity, maybe we can bring them back into the admitted market. But yeah, the non-admitted market, it may be quite a bit more. It can, the admitted market has some limitations as far as how much additional premium they can get.
Okay.
But the non-admitted, they don't. They can just price it what they think it's worth for this risk. It no longer fits the admitted market, so it's a higher risk and goes to the non-admitted market. So you're going to pay more because you're considered a higher risk. But there are times with like drug or alcohol abuse. Unfortunately for anesthesia providers, the industry is not overly empathetic about it. They think you have easy access to drugs, alcohol, to drugs at least. And so it can happen once and it'll be expensive. If the nursing board gets involved, it can actually go into almost 6 figures. If they say, oh, you have to go inpatient for a while and you need to be on a monitoring program for 1 year, 2 years, that's very pricey to do. And so it can be very, very expensive, when you look at things like that. But if you had a second occurrence of drug problems, alcohol, we may not be able to place you. You may have to go, do some other maybe RN work or something for a while. And then, if you get a prolonged period, maybe we can try again. But, the admitted and non-admitted, if it's been recent 3, 5, 10 years, they more than likely won't take you. So, and a third time, there's no way, we won't be able to find coverage. And that's where it's career limiting.
Right. So is there a chance or a time that a claim wouldn't be paid? I mean, by your coverage, even if it's $100,000 claim, is there something that would like forego that or make that non-payable, and that's like on you?
Yeah. So if, let's say you've had claim activity, but on your application, you said that you've had no claim activity. And during all this discovery, it's determined that you did, that can rescind coverage, because insurance is an offer and acceptance. We take your application and we believe in everything that is accurate there. And because we base our offer on the application information, and then you can either accept our offer or you can reject it and walk away and find somebody else to, quote you. But if what we relied on and created our offer from was a lie, then there is actual terminology in the policy that says we can rescind coverage, or not us personally, but any carrier. Most of the time it's going to say that they could rescind coverage. So you definitely want to be honest and forthright with them and work through, like, this is how things have changed. This is how I'm no longer doing this particular type of case because I don't want this to ever happen again, or, just whatever the explanation is, it needs to be your explanation and the truth, right? And so you're more likely to be successful with that kind of discussion with your broker and carrier than trying to hide it, and it'll surface eventually.
Well, and paying for it and then not even being able to use it is stupid too. So
yes, exactly. exactly.
Are there any other like resources that you would point us to? I know I have that fact sheet and I put that out there. I'm just seeing if there's any other resources or good places. I know, if their person was insured through you guys, it would be easy to call the AANA. I sent you guys quite a few emails asking questions before, so
Oh,
I know that
good.
that's always a good resource as well, but just seeing if there's any other places that you might direct us towards.
Yeah, I have a QR code that will take you to all of our insurance resources. I would also say, because we touched on the drug alcohol thing, I also have a QR code that takes you to the AANA helpline, which trying to remember the name of this organization, but nothing is reported to the AANA, but it's a benefit of membership. So that's just one more thing. And it has a contact when you scan their QR code that goes right into your phone if you want to save it. You could give it to your loved ones, like, if you ever see me, having issues, here's a line, number you can call and give me help. So, and it's so helpful to be with, to be in touch with one another, because you're in a very high stress job. So I think, that's a great resource to have as well. But the QR code for the insurance services, it takes you to where you can apply. It takes you to where to ask for a premium estimate. It has all of these like employee checklist at what questions to ask your employer, the occurrence versus claims made, admitted versus non-admitted carriers. So I think that'll be very helpful. So I'll go ahead and send that over to you, Jonathan, so that you
Awesome.
can post that as well.
That'd be great. Well, thanks for taking your time. I know that was probably a little longer because I have no idea how long we've been talking, but I just wanted to get a little bit of information and try and, pass that along. I mean, those are some of those questions are questions I've had for years. I'm like, I wonder, and I've always had the impression that they could rescind a tail if you had a claims made policy, and that's why one of the reasons I've always wanted more of an occurrence-based policy. So to find out that I had a claims made because of Kansas was a little bit concerning to me. But
I
I'm
see.
also understanding that there's a lot of policies that say, well, after 2 years, we will automatically include the tail, or 3 years or 4 years, whatever that is. Now, the well, that's another question for the Kansas person. So I would just ask the Kansas person what I have to do as far as maintaining that. Should I decide to leave anesthesia? Do you get the tail in the future or something of that nature? So I will
Oh
try
yeah, there's
that. So,
a lot of companies will have free tail if you permanently retire after 5 years, or age 55 and 5 years. But a lot of them have removed that age. Well, not a lot, but some have removed the age requirement and said, if you're permanently retired, then, and you've been with us 5 years, you can have a free tail. But, nowadays, if you go back to practice, you have to pay them back for that tail.
uh,
And that's something that's easily monitored. I mean, as far as,
they just look for your
whether you're
license,
practicing. Yeah.
right?
So, and billing codes and things like that too. So yeah, so you want to be truthful with that. For AANA insureds, we found a great carrier that converted everybody immediately to occurrence when MedPro first came along, and that cost MedPro and really the agency a great deal of money. We could have collected a lot of tail premium money, but we wanted to do what was right. We knew occurrence was the best product because you have those separate limits each year and you don't have that balloon payment of the tail. And when you do price it out, by the time you add the tail to any of the years of claims made, it ends up for us, for CRNAs, even the first year, 1 year claims made plus the tail, you still save like I think it was $159. If it's a 3 year or 5 years, and we did occurrence versus claims made, you still save, I believe it is $1,500.
By doing
So
the occurrence policy.
by doing the occurrence, yeah. So it's $1,510 for the 3 year example. It's the same savings for the 5 year example, and it's $636 for the 1 year example. where occurrence is cheaper when you do it that way. Even though you're stepping up with claims made at a lower premium over time, that
Right.
tail comes in and it's a
Wipes it
level
out.
playing field. Yeah, it
Well, and
wipes it
that's
out.
my problem with the Kansas and the policy that I have now, because it says claims made, and I'm like, well, does that mean I'm going to have to pay this massive tail in the end, and I'm going to get out of luck because they won't write a different policy?
Yeah, I think the Kansas Funtail is going to be a little kinder. So but I like I said, I haven't done Kansas in a number of years, and I
Yeah.
want my expert to come in. So I'm gonna have to find out who that is and give you the name, and we can I have an idea of two people, but I want to make sure that I'm telling
Yeah.
you the right name.
Well, thank
So,
you
and
so much. I mean, it's
yeah,
just been so interesting, and I always like being able to, you know, get some good questions answered.